Where I wanted to start out this story in regards to Palantir, okay, is this stock is actually down on a 3-year basis. Yes, I know that performance has been astronomically great for the past year, but the reality is this stock is down on a 3-year basis now at this point in time, okay? Now, there's a lot of reasons why the stock's down on a 3-year basis, but one of the big reasons is shortly after this company went public, we went into a massive, the biggest bubble market I've ever seen in my life at that particular time, right? And all everybody was looking at after the Rona crash was really only upside potential in regards to all stocks in the market, and pushed up valuations extraordinarily high at that particular moment, right? Compared to where companies were actually, where their business models were at, right? And so after that, then there was a very depressing cycle that happened for countless stocks, Palantir just being one of those, where you just had massive amounts of people sell shares as we got to the end of 2021, and especially in 2022, when rates just kept going higher and higher and higher, and people didn't know where the Fed was going at the end of the day, right? And a lot of retail folks that maybe bought this stock in early 2021 or late 2020, you know, they sold those shares, right? Because the stock market attracted a lot of folks that really didn't belong in the market, right? They just kind of, you know, there was a lot of money sloshed out there, a lot of stimulus money, and people were just looking for, you know, places to put money, and, you know, these sorts of stocks attracted folks. But think about where Palantir business model was 3 years ago versus today. And I'm here to show you what a difference. Check this out. So if we go back 3 years ago, this company was doing $340 million of revenue a quarter, right? If you look at their latest quarter they just posted, 3 years later, they're doing well over $600 million a quarter in revenue. So they've nearly 2x'd their revenue in just the past 3 years. So the revenue is dramatically more than it used to be back when the stock price was actually higher than it is today. Not only that, if you look at their net income, net loss, right? Check this out. If we go to 3 years ago, they were losing 9 figures plus a quarter on the bottom line. 9 figures plus a quarter, right? If you look at their latest quarter, they're now profiting net income 9 figures plus on the bottom line. What a flip for this company, right? If you looked at, I looked at Palantir 3 years ago. I did not like what I had seen at that particular time, right? It wasn't really till kind of later in 2022 that I really started to like what I saw, because it looked like, oh, this company's going to flip to profitability. 3 years ago, people were sticking money in the stock, and it was highly risky at that particular time. When you're losing 9 figures plus a quarter, whew, that's no small amount of money, right? Now, on top of that, if we look to where the balance sheet was 3 years ago, it was in a way worse place than it is today. Today, it's one of the best balance sheets you'll find of any mid-cap, you know, maybe even borderline large-cap company out there. Look at this. Look at this. I mean, the only places you'll really find better balance sheets than this is if you go to like the mega caps, right? Like the Metas and those sorts of companies, Nvidias, right? Amazon's. Like, it's hard to find a better balance sheet than Palantir, honestly, out there outside of really mega cap. So if you go back 3 years ago or so, company had about $2 billion of cash and short-term investments. Now they have nearly $4 billion of cash and short-term investments. If we go back 3 years ago or so, total receivables was around $156 million. Now, latest quarter, total receivables just under $500 million, right? I mean, what a difference in the balance sheet over the past 3 years. Look at stockholder equity, right? Total equity has well over 2x over the past 3 years or so. You go back to a little over 3 years ago, $1.5 billion in total equity, now nearly $4 billion in total equity, right? So think about this for a moment, right? The stock's down on a 3-year basis, yet the revenue is around 2x higher, right? Now they have 9 figures plus in net income they're doing a quarter versus 3 years ago, they were losing 9 figures plus of a net loss, right? They have over 2x the stockholder equity that they had back then. And then additionally, on top of that, there's a proven executive team now at this point in time as far as running a public company. If you went back 3 years ago, they hadn't been proven yet, right? They hadn't gone through a tough time in their stock price. They hadn't, been public long enough at that time. Now, this company's been public for many years. We've seen them go through hype cycles. We've seen them go through pretty much depression cycles. I mean, the stock went all the way down, $6, $7 a share at that particular time. Is insane, right? And now the company has more growth levers all over this company than they've ever had at any time point before. And so we'll go through that in just a moment. But I want all that to sink in there, because it's not very often that you can get a stock down on a 3-year basis, but the fundamentals of the company have gotten dramatically better, like night and day better. Not like, oh, it's improved a little bit. Like, this isn't even the same company practically on a financial front now at this point in time, right? And what would Warren Buffett tell you? Warren Buffett would tell you, when you have an opportunity to buy a stock price when it's gone down a lot, yet the fundamentals of the company have gotten dramatically better, that is your sweet spot as an investor. That is your opportunity. That's like being a baseball player and you get, a perfect pitch in there and it's time to swing and let's hit a home run here, okay? That's very rare. You can get a stock down on multi-years, but the fundamentals have all gotten so much better for the company. Usually, if a stock is down on a multi-year basis, it's because the fundamentals of the company eroded. And it's like, wow, this company's just, their revenues are down, their net income's down, their margins are down, everything's down, right? The sentiment's down. No. When everything in the business gets better and the stock price is down, that is an opportunity, a real opportunity. Now, I said there's growth levers all over this company, right? Let me show you. So, AIP, this is the hype product. This is an exciting product that, Palantir has been doing these boot camps for this product, and it's absolutely incredible in terms of how much excitement this is really bringing around Palantir. And I'm not just talking about it from a stock perspective. I'm really talking about from a business fundamentals perspective. It took Palantir from being kind of like a little bit of a niche company to now it seems like everybody who's everybody wants to see what Palantir has going on with AIP, and they're trying it out and they're getting tremendous results from this overall. And so, Karp describes the boot camps as like, it's like getting backstage at a rock show. It's absolutely incredible. And so this is a game changer fundamentally for Palantir, because this, not just AIP product itself, but the attention it gets from other real large companies is, like borderline viral marketing, but without having to spend for that viral marketing. So that's the first thing. AIP is just like, and the thing with AIP, they're still learning how to monetize this thing. And if you know anything about great products, right, and you really study Meta, for instance, Meta will always release a product, get it to big scale, and then they worry about monetization. And Palantir's taken a very somewhat similar approach with AIP. Get a ton of people interested for it, right? Get a lot of folks signed up for it, and then we'll monetize over time, right? And so AIP, you're not really getting to see necessarily the big numbers in terms of a financial front yet. For AIP, you're going to see the big numbers for AIP years from now. As years tick on, you'll see revenue pour in, you'll see profits pour in. This is really just a time period of just getting the company mass amounts of attention, mass amounts of people utilizing Palantir's product. And that's very important to understand that. It's not about just making all the money right now. It's about getting a ton of people into this ecosystem interested in Palantir, and then we'll worry about making money as the quarters tick on and as the years tick on in the future. And Karp, it was a few quarters ago, he was interviewed, and he basically said, we'll figure out how to monetize it. We don't really have a plan. Wall Street hated that at that moment. They don't like to hear that, just to be quite frank. That was maybe 2-3 quarters ago now at this point in time. That scares them. But it's a meta-type philosophy, right? Release a product, have it go viral in that space, and then once you have a big scale, worry about monetizing it more and more over time. And if you've reached big scale, there's going to be so much money to be made there, it's ridiculous, right? Now, in terms of the moneymaker, Foundry, right? This is a commercial product that is a real moneymaker for the company. If you're a large organization and, let's say you're a $2 billion run rate a year in revenue, right? You're some big food company or something like that. You're going to look at Palantir to help you out immensely, run your operations a lot better, a lot more efficient. And from what I understand in regards to Foundry, and this is very important, everybody understands this point, okay? From everything I understand with Foundry is whatever you spend on Foundry, you should get that back at least, if not a lot more. So essentially meaning if you spend, let's say you're a large organization, you spend $10 million a year. with Palantir Foundry, which is not a big, it's actually not a large amount of money. Palantir's got an insane amount of customers that spend millions, tens of millions of dollars a year with them overall, right? I mean, 10 million a year, that you wouldn't even be in their top 10, 20 customers likely. So you spend 10 million a year. Whatever Palantir's helping you with should help you get at least a 2x ROI on that. Meaning essentially, if it's cost savings, it's going to find at least like $20 million worth of cost savings a year. And that's a beautiful thing with that product. And so therefore, you want to stay signed up for that product. And you realize this is a superior product. It's going to save us a lot of money. Whatever we spend with Palantir, it's going to be small amounts. And so that's a beauty. That's a beauty with this product overall. And when it comes to Palantir, I mean, you think about the time period we're going through right now, companies are watching their budgets, right? Which hurts Palantir from the perspective of companies are really tight with signing up for new products. So that kind of hurts them, but it also helps them a little bit in terms of, hey, if Palantir can make your business run a lot better and get you a positive ROI, it's money well spent in a time when companies are a little tight on budget, right? So little food for thought in regards to that. And when budgets do loosen up, I think it's going to help out Palantir as well, because a lot more companies will feel comfortable spending, because Foundry is not cheap. Palantir is not going to give you access to Foundry for, a small amount of money, right? So little food for thought in regards to that. Then they have Gotham and Apollo. These are more government-related products, more military-related products, right? And these products are still the big money maker for the company. They're still the big money maker for the company. These are very large businesses that have been built over a long period of time, right? These products really scaled out way before Foundry scaled out and way before AIP was even a thought process out there. And so when it comes to these products, they're the big money makers, relatively stable business model. This is not where the most exciting growth is for the company. And the government is in a bad spot, U.S. government and international governments, in terms of how much they've been spending in federal deficits and all those sorts of things. So this is just a stable, really good, it's still a nice growth engine for the company, but it's not the growth numbers you're going to see from the commercial side, and you're going to see from Foundry, and you're going to see from AIP. Those are the real growth. That's why I'm investing in the company. The government business and military business, these are more just like, they're helps overall. But the reason I'm investing in this company personally is because of Foundry, because of AIP and products like that. Not really for Gotham and Apollo, but they're very important. And at the end of the day, you just can't replicate what they have with Gotham and Apollo. If you could, like everybody, we'd go out there and do it, right? Now, they also have FedStart as well. And this FedStart, Palantir FedStart, is a SaaS offering eligible companies and startups looking to deploy software to the federal government. FedStart supports companies to FedRAMP to IL compliant, rapidly enabling acceleration in weeks or accreditation in weeks, right? So basically, if you're going to, let's say you've got a business, you've got a software or something, you want to sell it to the government or sell it to the military or something, right? You need to get these certifications, okay? IL5, IL6, right? And Palantir says it can take years and cost millions of dollars in consulting and engineering fees to get these sorts of certifications. It's the government and the military, they don't just give out these certifications to everybody, okay? That's not the way this works. It's ridiculously complicated to do this. FedStart can significantly accelerate time to market by eliminating the need for organizations to pursue accreditation on their own, right? And so Palantir is going to be able to help you basically get compliant. And you can go your own route and, potentially spend years or millions of dollars trying to do that, or you can use Palantir. And so it looks like how Palantir gets folks in, like, okay, Palantir's not going to do this for free, like they're going to have to want money, right? So it looks like you're going to basically kind of be put into the Apollo program, right? And into a FedStart environment. So remember we spoke about Apollo and Gotham here. So it looks like you'd be put into Apollo, and so that's likely how Palantir then monetizes from this whole situation, right? Because I don't think Palantir has all the time in the world just to say, oh, let's just help all these other companies just get accreditation. No, they're going to want to make money off of this in the end, right? And so that's just another growth lever for the company. And this is actually a relatively new growth lever. Like, they were just talking about this back in June 2023. That wasn't even a year ago, right? Not even 1 year old now at this point in time. So that opportunity long-term is large for the company. How large is hard to even put a number on it because it's such a new business. And so for brand new businesses, it's really hard to project, like, is this going to help the company's revenue $10 million a year, $100 million a year, $500 million a year? It's hard to put a number on it today, but there's no doubt that's a big opportunity for Palantir overall, right? Alrighty, next one up here. Let's get Mr. Tom Lee's perspective.
Set to dominate and be the theme in the market for the next few days. Could your money be at risk if Nvidia pulls up lame? Let's talk about it with our friend Tom Lee, Fundstrat Managing Partner and Head of Research, CNBC contributor, and a guy that remained resolute and strong and long, even when things were looking shaky a couple of weeks ago.
So you know what's interesting about NVIDIA? You got a Dan Niles, right? Dan Niles talking about, oh, everybody knows they're going to, beat and raise, and talking about it's going to be great. But then you still got all these question marks about like, is NVIDIA going to miss? What if they miss? Like, what's going to happen to the market? What's going to happen to my money if NVIDIA doesn't come through and report great numbers? So there's still, I would say, a lot of worry about NVIDIA into these earnings, which I think is very healthy.
Tom, maybe what did you see that others missed?
If we're talking about why markets recovered, to us, the April wobble was really a market overreaction to a string of some inflationary data and then a fear that the Fed was going to turn hawkish and potentially raise rates. I think that is pessimism really pushed to the extreme at a time when I didn't think markets were exhausted, that a top wasn't in place. So to me, it was a healthy pullback. But, it's been important to buy in May. I mean, the market's up 6% since then, and there's still $6 trillion of cash on the sidelines. And, investors actually been pulling money out of stocks the last 2 weeks as well.
Did we overstate the importance of just one company, Nvidia?
We did not, because as you sort of set up, Nvidia is really one of the most important companies today because they are supplying a key piece of what is powering all of this innovation in AI. I mean, everything else is really tagging along with actually the value creation because of NVIDIA chips. So it's an important company and an important week.
NVIDIA on when?
So I mentioned this guy to you guys. I mentioned this. When did I mention this to you guys? I don't know, maybe a few days ago or maybe a week or two ago. But NVIDIA's the most important stock in the market still for 2024, right? It was the most important stock last year. It was the most important stock this year. But there's going to be a changing of the guard next year. Most important stock in the market next year is actually going to be a stock that used to be the most important stock in the market, and that is Apple. Apple is going to actually become the most important stock in the market because they're going to be coming out with bigger iPhones. There should be growth in iPhone units again, and I think everybody's going to be looking for Apple for leadership. By that time, everybody knows NVIDIA, like the growth rates are going to slow, obviously, quite a bit next year for NVIDIA. So NVIDIA won't be talked about as much. It's still going to obviously be talked about. It's still going to be a very important stock, but I think the talk and debate around NVIDIA will be much less because it'll just be like solid growth numbers. At that point in time, the parabolic, insane growth days will then be gone for NVIDIA at that particular moment, right? And then Apple, everybody's going to be looking at that as such a massive market cap and like, wow, what if iPhone units get back to growth? And then what type of growth rates are we talking about? Could we be looking at Apple from a perspective of, are they going to beat earnings? If they are going to beat, how much? Versus the last, I'd say, year or two, we've kind of been looking at Apple thinking, are they going to miss? Or are they going to just come in and meet numbers? That's kind of been the thought process there. So, we'll have a changing of, what's the most important stock again. Like I said, for a long time, it was Apple.
If they come in a little weak, the stock's been weak, so it seems like the market is ratcheting down some of the expectations. So give us the scenarios, Tom, if NVIDIA meets or, misses or meets or has a giant beat. What do you think is the implication for the macro market?
Well, it's going to obviously be a disappointment and a negative shock if NVIDIA misses expectations. And, they are very lofty expectations. I would think investors are going to be nervous, but ultimately it would be I think a prelude to a market broadening because investors who own a lot of NVIDIA might want to look for other stocks that are starting to show promise. If NVIDIA beats expectations, because I'm assuming you're going to ask me that, I think it's going to pull money off the sidelines. And I think, again, it probably helps propel a broadening of this market rally. I mean, I think there have been other groups starting to participate, like energy materials this week.
Yeah.
So, but it would be better to see a beat than a miss.
Yeah, I feel like energy, a lot of you look at stocks like a Vistra, I'm not asking you to go into individual names, but a lot of these energy-related stocks have soared because of AI, because they know that the demand for power, literally...
It would be interesting to see, like, imagine Nvidia, let's say they missed numbers, but then they destroyed guidance or something like that, right? How would the market take that? That would be really intriguing. If they missed revenue, but then their guidance was way stronger than expectations, because let's say like shipments or deliveries was off or something like that, that would be really, really intriguing. But alrighty guys, appreciate you joining me. That wraps up today's video here on the Reaction channel. Thanks so much for joining me as always. Down there today I'll put my new workshop for you guys. It's a free workshop if you want to access that as pinned comment, and then also my Twitch channel, because in 48 hours from now I will be going live for those Nvidia earnings along with Elf and Snowflake on there. Much love and have a great day.